Well, hello, everybody. It's Blair Nightingale here. Welcome back. Market Monday is about to fire up. January 15th, 2024. We're already 2 weeks in. 2024. Welcome, guys. I am Blair Nightingale. As I said, this is Market Monday. We come together right here on YouTube and Facebook every Monday night. We're going to keep up with the headlines. It's a short week this week. Big headline today, you got to say, it's MLK, right? It's MLK today. So the markets were closed this Monday. It is a shortened trading week. So we've got 4 days coming up, trading sessions. We're going to look at some things today specifically. I want to go in. I want to update what's happening in the markets, what's happening in the index. We've got some news this week. Not a lot on the data side for the most part, but we do have some earnings firing up. I'll talk about that and why that matters to you as a trader. Also, if we really want to look at a specific area of the market, how do we do that? Because as we'll find out when I talk a little bit about the news coming up, it may affect certain sectors, parts of the economy more than others. How do we do that? I got a question from a student today on, I'm really going out there. I'm looking for patterns. What are some things I can do to beef up my watch lists that I'm looking in for stocks and trades? And so I want to talk about that a little bit. And if we've got some time, we walk through within our program, we walk through a paper trade. Paper trade means we just got into a virtual trade. We used the tools we have. We used the system we had. We got in, we practiced. It doesn't really test the emotions for a trader to do a paper trade, meaning monopoly money, a trade without real money. But it does give us some benefits. Number one, what do we trade like? How do we trade when those emotions aren't on the table? Usually somebody says that's the downside of paper trading. I think as long as you're aware of that, it doesn't have to be the downside. It can be part of the upside. This is what it feels like when I'm not under the influence of some of those emotions that can come in when I'm trading. I still have to work that out with real money, of course, and there's a process to do that in a healthy way, but I can get that benefit out of paper trading. And the second thing is just testing your edge, going out there, pushing the buttons, making sure you understand the mechanics. So if we have some time, we'll look at one of those as well. Steve is starting us off tonight right there. Facebook in the chat, saying hello. Good evening to you, sir. Steve, I appreciate you being on here commenting. If you're with us tonight and you want to throw in a comment, a question, a concern, a feedback, whatever it is, go ahead, pop it into the chat there, Facebook friends, YouTube friends. And we'll take care of that live for you. Of course, that's the benefit of being here live. You're able to do that. People are going to be watching this on recording. It'll be posted on YouTube like all of our Market Mondays over the last 2.5 years. You can watch them there. But when you show up live, hey, you can ask some questions. So why not? Why not do it, right? All right, with that said, let's go ahead. Let's put the market up on the screen. We're going to head on over to the S&P. Now, I knew the market was closed this morning, and it's funny, I opened it up about, it was probably about 8:40 this morning here Central Time. Is it just a little cold outside for anybody out there tonight, right? Post in the chat. Brant says from Colorado. Now, Colorado, depending on where you are this time of year, it's going to be cold anyway. Cold is relative, right? If you're in Montana, it's like minus 45 right now. So Debbie in Florida, no, not cold at all, right? In Dallas, it was -2 last night. Okay, so we're just trying to keep warm here, man. I actually like it. I went for like an hour walk later, earlier this evening. So I kind of like it. You got to take it when you can get it out here in Dallas. That said, I digress. This morning, I went in and I forgot for a moment. Oh yeah, the market's actually closed today. So no candlestick for today on market update. However, looking at this guy here, now I'm going to get rid of this arrow just to clean it out a little bit. This is what we're looking at. Let's take a bigger view, okay? Fed makes an announcement, talk about the potential to cut rates. Whoosh, market shoots up to that 4,800. If I go to a 3-year weekly chart, you get an idea of where we have been, okay? Now I'm going to get rid of this, move this if I can on, yeah, there we go. Move that question mark. Where we've come to, right? Here's our all-time highs, right? 48.18 is the all-time high, not the all-time close. And we've pushed up above that now, okay? We've had a close above that. So we're back in a key area. I'm going to tell you right now, anytime we come into an all-time high after a bear market with interest rate policy in the balance, that's a pretty important thing. I think that's something we ought to pay attention to, even just in the near term, short term, as traders. You got to look at that thing and go, hey, that's resistance until it's not. Okay. It's hit it essentially 1, 2, 3, really the 2 times, right? We're looking at really getting up into that 4,800, which technically, now let's zoom in a little bit here. All right, I'm going to shrink this down. Obviously 4,800 is a little bit higher here. Friday, the high of the day, 4,802. So we're knocking on the door, and you can see it's pulled back up, fell, hit the 10-day, recovered, fell a little bit on Friday, recovered. So not really showing significant weakness, but just some indecision up at the top. So traders out there going, all right, what's the tone? It's funny, I just mentioned, how cold it is outside. Literally the pool outside, the pool is frozen. I walked by a fountain earlier tonight. I wish I could post the picture on here. The fountain is still technically flowing, but it's ice. It's just frozen, okay? And when I talk about market tone, the reason we look at indexes, we're not looking at the indexes because we're always trading the indexes necessarily. We're not looking at the indexes because we're trying to predict what's going to happen tomorrow. We're looking at the indexes for 2 reasons. Number one, what's the overall tone, momentum of the market? Is it in a pattern? Number one. Number two, is it closer to support or closer to resistance? Why would I want to know that? And what can I do if I did know that? You could gauge the weather, the tone, not guess the direction, but gauge the tone. If I gauge the tone, then I have some very important information on how I can proceed with risk management. When you go outside and the fountain is frozen and the pool is solid ice on the top and the roads are wet, I bet you're going to go, wait a second. If I drive, some of us aren't even going to drive in that, right? Some of us have never driven in that. Maybe we probably shouldn't. Some of us have a lot, but either way, you're going, all right, I'm going to go slower. I'm going to go slower. I'm going to leave more distance between me and the next vehicle. I'm going to brake earlier. I'm going to brake lighter. Some of you guys know what I'm talking about, right? Otherwise, what are you going to do? You're going to slide right into something, okay? It doesn't work the same. You can't drive the same. What do we call that? Risk management. It's risk management. It's the same idea. So when I assess the tone, I'm not trying to guess what the next 5 days of candles on the S&P 500 are going to be. I'm trying to assess the risk, the tone, and then I'm going to look for probability. So that's why we spend time looking at the market tone, the indexes, before we go off into anything else. It gives us an idea where we're at. Where are we at? Well, we are at a resistance. Well, yeah, Blair, but I don't think it's going to follow that arrow. I don't think it's going to go back down to that level. I think it's going to be strong. Okay, you think. You don't know. You think. I'm fine with that. I think too. I have thoughts too, right? I have opinions too. I have things that make me go, I don't know what it's going to do, but I feel more probability to this side than this side in many cases. Sometimes I would say it's foggy. And I would tell you, I don't have any idea. I don't see objective factors leaning one way or the other. And even when we do see that, the market can do what it wants. That's why trading isn't about knowing the future. It's about managing risk well. That's what it's about. Okay. That's the skill set. For the screen we're looking at right now, it is hitting that resistance. So if I was going to go long on a position, buy a call option, buy a stock, different kinds of bullish positions that I might take here, I am going to be cautious. I'm going to drive like it's a bit icy here, man, a little dicey here, because I am sitting at that 4,800 level. The other side of the coin here is, as you can notice, it's fallen off a couple of times, but it's fairly resilient. There's some indecision here. The buyers are still holding their ground. The sellers really haven't been able to take too much ground. I'm going to factor that in as well, right? It's not all one or the other, okay? But it is sitting at that 4,800. I would like to see some movement here, break through the 4,800. Give me a confirmation move. Head up on through that 4,800 and give me a close when I'm looking at nice bullish positions. Now, last week, we had this low right here. Okay, we had this low come down into here, and then the market moved down into the 20-day, tried a couple times, finally followed through. We went over, I mentioned we did a paper trade. Okay, that day, this fell down into the index, held, hesitated, followed through nicely. Okay, does it always move that clean? No. In fact, time doesn't permit for this tonight, but I was talking to some of the students in the program. This actually wasn't quite as clean as it seems. As you notice, there's a pretty big gap down here in this candlestick. Nevertheless, okay, this followed through. What do I mean? Well, I mean, once we assess what the market tone is, and we go and find a pattern in an individual stock that we want to trade because it has a pattern and we've done due diligence to set up the trade. By the way, this Friday and Saturday, tradeway.com/events, I will be teaching a step 1 start your journey. We'll go over all of that kind of stuff in that 2-day live Zoom this Friday and Saturday, 9:30 to 5 Central. So you can head on over to tradeway.com/events if you want to sign up for that. But what we're doing is going tone, then target. Okay. Tone, then target. Stock, setup, all that kind of stuff that we need to learn how to do. But right here on the index, it's really like, okay, give me a breakthrough at this level, punch through, close, give me some volume, show me some conviction, or let's see this thing pull back, right? I'd rather it not just float at this level for a few days. I want to see some movement, pull back. May not get that. I don't know. We can watch. It will tell us what it's doing, and that's all we need it to do. But if it pulls back down, I'd like to see it make that move. And then what would I do? I would look for that level again. Okay, I'd look for that level to come into play one more time. Of course, first would be the 10-day, then the 20-day, and we'll just take it levels down like that, okay? So that's where we're at with that. I think if I go over to the NASDAQ here, okay, it's a little bit different, isn't it? Okay, NASDAQ did very well last year too. Our all-time high, or our highs rather, our recent highs are up here. So we're trying to punch back into this trend, okay? We are above the 20-day. We are above the 10-day. So we got a little bit of room to run here. If this guy can get a nice move straight from here and break these highs, I bet we see the S&P catch a bid and start to move up a bit as well. But I don't know if we'll get that punch through on high volume yet. That'll be something I'm waiting for. A little tip, if you're looking at this index here, I'm going to go back to S&P. Little breakout tip, all right? Conservatively speaking, sorry, let me do that. All right, you can wait for the breakout, okay? Breakout, and I'm going to grab another arrow. Breakout, pull back into old resistance, new support, follow through. Breakout, pull back. Now, not that high necessarily, right? Breakout, pull back, stop, hold, buyers come in, push it higher. Okay? There's a confirmation move that we could wait for. Don't have to take that initial punch through on the index. Again, moving to an individual stock as well, where we found a good trading setup that we like and we want to take some risk on, we can do that at that point, okay? So that's what's happening on the indexes right now, okay? There's a little bit of political stuff heating up. I'm interested to see how that, impacts the perception of the election a little bit as we go on from here. I don't expect it to really move price action here, okay? But I know the corporate world is going to start to form some opinions here as, for example, the Iowa caucus happening. It starts to see, Trump obviously in the running. How far ahead is he? He's going to win in Iowa, but does he win by as much as they thought? They're starting to gauge some of their opinions. And I think as the year goes on, we'll see it emerge a little bit more what Wall Street is really favoring in terms of an outcome in the election. It's going to take some time for that to form. So I don't see that necessarily impacting the price action right now. But I definitely think that's starting to heat up. So I will say that that's at least on the radar for me down the road. But the bigger news item this week is really bank earnings. Okay. Bank earnings are going to fire up. And so what I want to do is just show you a couple of quick things. If you want to go over and you want to look at a specific sector, some of you guys have seen me do this before. One of the more popular ETFs in the world is these spider sector ETFs. Okay. The SPY that tracks the S&P 500 we were just looking at is one of, if not even the biggest ETF in the world. So this is massive. And this is the sector ETF that is connected to the S&P as well in terms of how it tracks its value. Okay, it's not directly connected to the S&P, except that it correlates its value from the movement of the S&P. So here we don't have the entire S&P 500 represented. We have the financial sector. Okay, ETF. Okay, so I can come in here and I'm going to get a general idea. How is financials doing? Now, I mentioned bank stocks. This isn't just bank stocks here. So I could go over and I can look at JP Morgan Chase. You'll notice earnings is coming right up, right? Okay. Now, or I'm sorry, earnings here looks like it's already happened on this one. Let's go over to Bank of America. Okay. Boom. Bank of America. WFC. Wells Fargo. Boom. Earnings. Okay. Citi. Earnings. Okay. So there's a lot coming on here for financial earnings, but those are banks. Okay. So there's more in here than just banks. So I can go over to homepage right here, market, and I can use what's called a heat map. Okay. If I want to go into finance, here you go. Here is the sector right here, but I can go specifically into industry groups, asset management, insurance, credit finance, capitals markets. Let's click on banking. Boom. It gives me in the S&P 500 the bank stocks that are included. Tells me how they did that day. I've got it set on day. We could go to month, right? We'd have to go back, banking, and then it's going to give me a reading over a month. Okay, I can see up here how that's compared to the rest of the sectors of the S&P 500. There are 11 of them included. It's more broad. It's not the most broad, but it is a good large cap, even mega cap, broad-based index that you can look at. So here I can click then on JP Morgan, click here, and it'll take me to the chart. Okay. We worked from the chart back to the heat map, but you can just go from the heat map, find what you want, find what's hot, find what's not, and work your way over to the chart from there. I had a student ask me, Blair, how do I compile even better and bigger watch lists to go out and look for good opportunities? And I said, well, I'm going to give you a couple of tips, and I'm going to give you guys those tonight. Number one, okay, in Charts by Tradeway, the software we're looking at, we have watch lists in here for you. Okay, we've organized them, price points, fundamentals, okay, suitability for particular strategies. They are included here. Second thing, scans and screeners. There are some great scans and screeners right here in Charts by Tradeway. In fact, we've got some scans and screeners in here for specific strategies that are well-known strategies, but even some strategies that we do here at Tradeway specifically. Okay, that's the second thing. The third thing is we've got coaches running webinars all week long. We're looking at trades. We're finding trades for students on Monday nights that you have the opportunity to decide whether or not you want to go and get into some of those. Paper trading, real money, it's up to you. But we do that Monday nights. You can always glean and compile lists from those coaches' webinars and the analysis and things that we do. Now, maybe you didn't ever look at Dropbox, okay? But now, hey, maybe Dropbox isn't at a buy point, but I might go put it on a list, okay? I'm not recommending Dropbox tonight. I'm saying put it on a watch list. Why? Because you heard about it right here. Maybe you hadn't been thinking about that one. Boom, there's one more on your watch list, okay? We've got steps we need to take beyond this to decide whether or not that's something we actually wanted to trade. But there you go. It's in my watch list. Maybe you add some of the big bank stocks that we just went through. It's a perfect example right there. So you're compiling, okay? You're adding as you go. And then from there, you can also just go, well, what do I like? What do I like? What do I know? I can add those into a watch list as well. And you can begin to analyze those stocks and look for patterns and breakdowns and trades from those watch lists in particular. You can have bigger lists that you then move down as you go through the week into smaller lists. I use something I call a go list. Okay. I may scan a larger list, find good patterns, move them down into a smaller list. Things that are then in good support areas or in bearish positions, they may be in resistance areas, then they go into the go list. Doesn't mean you have to go and trade everything in that list, but those are the ones you're going to look at, whereas you're not going through a list of 50, 150, 250, 500 different stocks every single time, right? You can get a workflow going and whittle that stuff down so that you don't have to spend that kind of time on that, right? So that's what's going on in the indexes. That's ultimately what's going on. Where am I going here? Can't find my screen. This week, there's going to be more earnings firing up. So seeing how is that really going to play out, okay? Is that going to be a bigger upset, a bigger excitement? This could be something that shifts and moves the market. And for traders, we always want to know what's going on in earnings. Okay. I don't need to know the EPS of every single company that reports earnings in the S&P 500. But when I am trading, I want to know, A, is earnings affecting the market tone that we just talked about? And B, am I about to trade a position during earnings? Okay. We've talked about this in episodes past. Using trading stocks and looking at earnings is different than investing in stocks and looking at earnings. They're going to be two different responses. When we are trading, our job is to what? Is it to guess tomorrow? Is it to use the crystal ball of technical analysis? No, it's to manage risk. Okay. It's to manage risk. There are many tools we can use to do that, but that's our job. Over earnings, very difficult to do that. You don't know which way the stock is going to go. Apple may report earnings and make a pile of money, but still not sell as many iPhones as they were supposed to, and the stock gaps down. Okay. You may be in a weak debit spread. You may be in a higher risk position. You may not, right? But you may be in a spot where you are not able to manage the risk effectively because earnings tends to be a highly volatile time. Okay. Yeah, but Blair, it might actually work in my favor. That's true. It might work in your favor. You might get a big win off of an earnings play. But how are you going to repeat that in the future? How are you going to be a good risk manager over 50, 100 trades like that? Okay. And if it does gap down on you, how many of those major losses are you really going to be able to take emotionally and financially? So we just remove that entirely from the equation. Okay. You get to trade your money the way you want to, but that is something that we just don't recommend doing, trading over earnings. In fact, a lot of brokers, if you go to trade over earnings or buy an option over earnings, you'll get a warning. Okay. You can do it, but you'll get a warning letting you know, hey, just so you know, the volatility here is about to go bananas. So you want to be aware of that. That one little thing, okay, that one little thing could be something huge for you. We talked a little bit last week. 2024, what are your goals this year? What do you want to do? Why not invest in yourself? Okay. Invest in yourself. I don't remember the direct quote anymore, but there is a Warren Buffett quote that basically says, you're your best investment. Invest in you because it pays a good return. Investing in yourself, invest in your money, invest in your mind, and then invest your money with your mind. Okay. Join us on Friday and Saturday. Step 1, start your journey. We will be teaching this 2-day Zoom class. That's at, and I'm actually just going to go ahead and just pull it up here and get it in there for you guys so that you can just go ahead and click on this. I'll put it in the chat for everybody here. You can join us for that. Me and Kaysen are going to be on there, another one of the Tradeway coaches. And we're going to walk through this, man. We're going to walk through the system. We're going to give you an options preview. We're going to talk about how do you begin to use a real skill set to look at edge in the markets. Okay, how do traders do this? How does this work? What does this look like? And how is it that thousands, okay, even more than 10,000 people just like yourself who've never done anything in the markets. Now, some of you guys have, right? And we can help you get where you're wanting to go in terms of learning how to up your skills as well. But a lot of the people here at Tradeway, listen, you never trade a day in your life. This is not something that you've been thinking about, okay? Maybe I should say that differently. It's something you've been thinking about. And I know because I've talked to a lot of you, but you didn't know how to start. You didn't know where to start. You didn't know what to do, okay? You didn't feel comfortable doing it. You didn't find the right community. You didn't find the right opportunity. It wasn't the right timing. And tonight you're here and you're going, this is the right time. This is it, right? If not now, when? So this weekend, you can join us. Debbie is jumping in on the chat there. She said, I signed up today. So congratulations, Debbie. I will see you on Friday morning. I will be there with you, of course, and we will walk through this foundational system. You're looking at DBX on the screen. What I'm going to show you on Friday, Saturday is how do I go out and find these? You'll notice on the left-hand side of the screen, there's this pattern. It moves up, then down, up to the line, down to the line, up to the line, down, up, down. Then we had what? Earnings. And then what did it do? It started this rolling hill upward pattern. We'll talk about what that is on Friday and Saturday so that you can go out and learn how to find these things yourself as well, okay? So that's what we're going to do. Everybody, this is what we do here at Tradeway. I had a meeting with some people here at Tradeway today, and I'm telling you, we've got some exciting stuff coming this year, 2024. It's been an absolutely explosive few years for us and our students the last couple of years, and we've been around since 2009. So we've been growing and going with you guys, but certainly it's been a big couple of years. And what we're planning to do this year is going to be bigger and better than ever. So now's the time to jump on board. We are so glad to have you. Hope to see you guys with me on Friday. If not, next Monday, I'll be right back here on Market Monday to update you for the week. Appreciate each and every one of you. Have yourselves a good night. Stay warm out there. If it's snowing, if the fountain near your house is frozen, okay, stay warm with the family tonight, and we will see you guys next Monday. Thanks so much. Good night.